do have the Finance Minister about to start his press conference.
We see signs that the steps and measures that we have taken in the last few months are beginning to yield results. The current account deficit is well under control, and I'm confident that we will be able to adhere to the red line on the fiscal deficit. Yesterday we received news of strong growth in the core sector, and I will deal with that presently. This news, together with the strong monsoon and healthy exports, augurs well for economic growth. There are still many challenges, the most important being inflation and reviving investment. But I think there will be green shoots even in investment, and we are confident that the measures taken by the Reserve Bank of India and our own measure at maintaining fiscal discipline will eventually bring about a moderation of inflation. There is reason to believe that investor confidence in India remains intact. In fact, on my recent visit to the United States, where I met with several important investors and representatives of industry, I got the impression that they continue to retain faith in India's economy, and that the investment cycle, which in my view is revived, will only gain momentum in the next few weeks and months. Let me look at some figures in detail. Firstly, exports. Export performance has been very good in recent months. The Ministry of Commerce put out a press release. You may have seen that press release. In September 2013, exports were 11.15% higher in dollar terms than in September 2012. Cumulative exports for the period April-September 2013-14 was 5.14% in dollar terms over the corresponding period last year. On the other hand, imports in September were less by 18.1% over September 2012, and cumulatively in the period April-September, imports registered a negative growth of 1.8% over the corresponding period. As a result, the trade deficit for April-September was US dollars 80 billion, which was lower than the deficit of US dollars 92 billion during the first half of last year. What is important is the sharp pickup in exports in the last 3 months, and I'm confident that the same momentum will be maintained in the remaining 5 months of this year, which means the overall trade balance will be well contained, and as a result, it will immediately reflect upon the current account deficit. The last time I addressed the media on current account deficit, we had estimated that the current account deficit will be contained at $70 billion or below. Subsequently, I have been urged by some of you to revise the number and give you a revised number, and I've resisted that temptation so far. But today I can say that the current account deficit is likely to be perhaps $60 billion or below. Last year it was $88 billion. And this year, if we're able to contain it at, say, $60 billion or below, that would be a very significant achievement. One of the reasons why the current account deficit looks healthy is, of course, exports. The other reason is we have been able to contain gold imports. I know that we have been rather strict as far as gold imports are concerned, but I'm sure everybody will agree that in the long run, that is the best decision that we could have taken, namely contain gold imports. Gold imports in the second quarter, July, August, September, were 47.75 tons, 3.38 tons, and 11.164 tons. In October, because of the festive season, it has risen marginally to about 23.5 tons. I'm not worried about imports of about 23.5 tons. I hope it remains at the level of about 20 tons a month, in which event, by the end of the year, gold imports would have been severely compressed, and that would be a very good sign for the current account deficit. The second point that I wish to make is the results of growth in the core sector. The numbers were put out yesterday. The numbers are very satisfactory. Core sector growth has been 8% month on month over last year in September. But look at the numbers beginning April this year. We started with 2.3% in April. We had 2.3% in May, and then came the bad news, 0.1% in June. We were worried, but in July it picked up to 3.1%, August 3.7%, and September 8%. Each of these numbers is month upon month. What is significant about the September number is it is 8% upon a very large base last September. Last September it was 8.3. So 8% upon 8.3 is very good performance. I sincerely hope that the core sector will continue to perform well